Okay, hello everybody. Welcome to our Group 6 presentation about Google Financial Management. First, we will look at our group members. Okay, first we have Miss Thanh Nhi as our leader for our Group 6. Next up, we will have Mr. Doanh, me, Gia Huy, Mr. Hoàng Nam, and finally is Mr. Hoàng Tiến Lộc. We are going to present through this table of content. First is the introduction, which is very short, and next up would be the body, which is divided into 3 parts, and finally we will have the conclusion. Now, let's come to the introduction first. A little bit of a background for Google. It is founded in 1998 by the Alphabet Inc., which is the founder, that is Larry Page, as well as Mr. Sergey Brin. And these guys are currently holding around 51% of voting control through the Class B shares. And, well, a little bit more information. The company operates a dual-class stock structure, that is the Google and Goog, the two currency for the stock market, and this can ensure this transparency through the regular quarterly financial reports, and also aims to assess the Google's financial strength by analyzing its stock performances, assets, key performance indicators, as well as applying the SWOT and financial ratio analysis. Right. Now, we come to the body. The first part of the body will be the financial performance. Next up will be the non-financial performance and the industry economy analysis. Now, let's come to the first part, the financial performances. We're gonna have a little table here that is the income table for Google. And as you can see, we are having numbers for 4 main years, the 2022 to 2025. And we have a bunch of criteria like the net income, revenues, ROE, ROA, or ROIC. And here you can see that most of the time the numbers are rising quite substantially. Now, we're gonna go to another table, that is the net income and revenue table of Google. As you can see here, they have a very good trend of going up from 2022 to 2025. And what does that mean? Well, we're gonna come to the next part. That is the financial analysis of this table. During the 2024 to 2025 year period, Alphabet Inc. showed a very strong revenue recovery and reinforcing its leadership in the AI era. And this growth is very affected by how AI has been, well, being the main topic of every tech company's investment. And in addition, Google has also invested a lot in the Google Cloud and has emerged as a key second revenue pillar, as it is delivering a rapid growth and positioning the company as a major competitor in the global AI market. And after that table, we're gonna have another table. Here we have a bar chart which shows the profit margin, which, the same as the line chart before, is tend on the rise from the 22 to the 25. And what does that mean? Well, next slide. We're gonna see that during the 2024 to 2025 period, Alphabet Inc. or AI has achieved a record profitability with net income exceeding $26 billion, and it has been driven by a very strong advertising revenue from the Google search, as Google is a search engine, and YouTube, an asset that Google owns. And this combined has created a very effective cost optimization. And another aspect is the workforce, and Google has been restructuring its workforce structure to reduce a lot of the internal costs and labor costs, which has optimized its structure a lot. Next up, another table. This one is green, and this is a very strange trend for Google. Here we have the asset turnover, and unlike the previous two, this one has a tendency to go down in the 2024 to 25 years. And what does that mean? Well, let's analyze a little bit more. And well, to explain, the asset turnover ratio of Alphabet Inc. has been declining, not because it is a result from a weaker revenue, but rather because of the total assets has been expanding at a very fast pace than the revenue that Google accumulates during these years. And the primary driver behind this trend is the Google's aggressive investment in AI infrastructure, with expenditure of up to $18.5 billion. And this has been, well, advanced processing chips as next generation data centers has significantly increased the fixed assets on the balance sheet. But is this all bad? Well, next slide we'll take a look at the reason why. And Google has considered this had a temporarily reduce in asset utilization efficiency. It affects a very deliberate strategy to build a strong technological foundation in the future growth. And in this context, the short-term decline in ratio can be viewed as a trade-off for long-term market expansion as well as competitiveness. Alright, that is all for that. Now we're gonna have another table. This time we will have the invested capital and the equity multiplier. Here we see that the invested capital is on the rise once again, but the equity multiplier seems to remain the same over the 4-year period. And as for why this is, well, next slide, we can see that the Alphabet Inc.'s invested capital has showed a very steady growth from 2022 to 2024 and rise to above 250 million to around 350 million. And in 2025, it increased sharply to approximately 450 million. Okay, this is all you have already seen inside the table. And this is a very good trend for Google. Right. Alright, that's it.
I will present about this chart. This chart illustrates the trends of Google's ROE, ROA, and ROIC from 2022 to 2025. Overall, all three indicators saw an upward trend over the 4-year period, reflecting improving profitability and efficiency. So on this slide, we can see that Alphabet Inc. achieved a significant improvement in ROIC, return on invested capital, during 2024. This means the company became more efficient at generating profit from the capital it invested. And the main driver was the strong recovery in advertising revenue, especially from Google Search and YouTube. At the same time, under the leadership of Sundar Pichai, the company implemented cost control measures and workforce restructuring, which helped improve profitability. So continue with that, the revenue continued to grow strongly through digital advertising and Google Cloud service. Meanwhile, personnel costs were reduced through efficiency programs and restructuring initiatives. Another important factor was Google Cloud. As demand for AI computing increased, Google Cloud benefited from economies of scale, allowing the segment to move from a loss-making business into a major contributor to profit. This demonstrates how Alphabet successfully balanced growth and cost efficiency. Here we analyze ROE, which measures how effectively the company generates return for shareholders. In 2024, Alphabet's ROE increased significantly due to strong net income growth, supported by advertising recovery, Google Cloud expansion, and cost optimization. At the same time, shareholders equity remained relatively stable because the company did not issue a large amount of new shares, and as a result, existing shareholders benefited from higher profitability without significant dilution. And overall, the increase in ROE reflects stronger financial leverage and greater value creation for shareholders. And this slide shows Alphabet's ROE increased from 18% to 22% in 2024. ROE return on assets measures how efficiently a company uses its assets to generate profit. The improvement was mainly driven by higher net income from advertising recovery, Google Cloud growth, and AI initiatives. And although Alphabet invested heavily in data centers and AI infrastructure, profit grew faster than total assets. This indicates that the company used its assets more effectively and achieved stronger operational efficiency. And finally, this slide highlights the stability of Alphabet's ROI return on assets from 2024 to 2025. Both net income and total assets grew at a similar rate of approximately 32% year over year because profit and assets expanded proportionally. ROI remained stable. This is an important sign of sustainable growth. It shows that as Alphabet continues investing in AI infrastructure and data centers, the company was still able to maintain strong capital efficiency without reducing profitability. And overall, this reflects efficient scaling and strong long-term financial management. And the next part will be presented by Hoàng Tiến Lộc.
So on the next part, we see here a chart that shows the total assets, the shareholder equity, and the current liabilities. So about this chart, we can see clearly that both three of these throughout the years they are all increased, and that will come to the current liability analysis. In 2025, so Alphabet increased in current liability stemmed from a strategic pivot toward AI infrastructure rather than financial instability. They driven $40.5 billion in expenses for data center expansion and higher supplier payable. So this surge is further compounded by antitrust, legal provision, and restructuring costs aimed at optimizing the workspace for Google Cloud and Gemini. So these ultimately, these liabilities represent a calculated reallocation of capital to secure long-term dominance in the AI sector. So overall, this increase in short-term liability represent a calculated trade-off, and it's gonna be a higher short-term leverage in exchange for long-term technological advantage, while liquidity remains strong due to high profitability. So on next part, we'll talk about the Google best-style analysis. Firstly, the political factor. Government action and policy significantly impact Google global operation. So we will talk about the opportunity and the threat. So the free trade agreements, the benefit of this is that this agreement facilitate the expansion of Google hardware and digital service into international markets. Next is the political stability in developed markets. So the benefit is that it's gonna stability in major markets, ensure a consistent environment for long-term investment. What are the threats of this? We will talk about the state-sponsored competition in certain regions. Government provide advantage to local tech firms, limiting Google market penetration and growth. Next, we will have the economic factors. So the economic trend dictate consumer purchasing power and operational costs. So opportunity is that the economic stability in major markets, grow in major economies, sustain corporate spending on digital advertising and cloud service. This also make rapid growth in developing countries. It's gonna provide a massive potential user base for low-cost Android service and basic internet service. And it's gonna lower the cost of renewable energy. As the green energy becomes cheaper, Google can significantly reduce the cost of powering its massive data center. The next factor is that the social factors, also shifting social behavior and cultural trends influence how users interact with Google. This will make a rise in social media use. While competing for user attention, it offers a chance for Google to innovate its social features on YouTube and iteration platforms. The user diversity, so it's going to increase online diversity, allow Google to refine its algorithm for better personalization and inclusivity. But they are concerned about the privacy, so the more growing social awareness regarding the data privacy require Google to be, it's gonna make Google to be more transparent on risk losing user trust. Next, we'll talk about the technological factors. As a tech-first company, these factors are the primary drivers of Google evolution. So the rise in Google in social media users, they are both threat and opportunity, while competing in user growing international access in emerging markets, expand the potential audience for Google search, YouTube and Workspace, mobile technology dominance. The benefit of this is that the ubiquity of smartphones continue to drive revenue through the Play Store and mobile integrated advertising, increasing cloud adoption. The global shift toward remote work and digital transformation create high demand for Google Cloud platform. So we will talk about the ecological factors, the environmental sustainability, impact Google corporate image and operational efficiency, support for environmental protection. Google can strengthen its brand by achieving carbon neutrality and investing in sustainable technology. So it also gonna make the supply chain sustainability, integrating green standard into the broad production of hardware, improve brand equity and long-term resilience. Next, we want to talk the legal factors. The legal framework defines the boundaries within which Alphabet must operate. Firstly is the privacy and data protection law. So regulation like GDPR or CCPA force change in data collection but allow Google to lead the industry in security standard. Next is the intellectual property regulation. Strong AP laws protect Google innovation, patents, and proprietary software and infringement. Antitrust, competition law, so increasing legal scrutiny regarding market dominance in search and advertising might lead to fines or mandated change in business practice. And on the next part, Nguyễn Thanh Nhi will talk about the rest.
So I'm Doanh, and we'll talk about the industry and competitive analysis. We can see as a portal side first model. So the first one is the industry characteristic. Google operates in a highly dynamic environment spanning online service, software, hardware, and digital advertising. So the key traits include the first one is rapid innovation. It constant R&D is required to stay relevant. The second one is the low switching costs. For most services like search or YouTube, the users can live instantly at zero cost. The last one is the data-driven ecosystem. So the competition is built around ecosystem like Android versus iOS rather than the standalone products. So next, we'll talk about the competitive landscape. So Google faced a strong force rivalry because its competitors are diverse and powerful, like the digital ads with Meta from Facebook or Instagram, Amazon and TikTok. Then we have consumer electronics like Apple, Samsung, Microsoft, or Sony. For the cloud computing, we have Amazon, then AWS, the Microsoft Azure. The last one is streaming and content like Netflix, Disney Plus, and Amazon Prime. Then now we will talk about the strategic recommendation. So according to the analyst, Google should prioritize the strong force of competition like continuous innovation to counter low switching costs. Google must stay ahead in AI and iterative technologies. Now, then we have the brand strengthening, like maintaining Google as a household verb acts as a shield against new entrants. The last one is ecosystem lock-in. By integrating services like Gmail, Drive, or Android Plus together, combined together, they make it harder for customers to switch to rivals. So the next part will be presented by Mr. Nam.
Good morning, everyone. So now we are diving into the non-financial pillars that sustain the Alphabet market dominance. We'll start with a factor that is often overlooked but business critical, which is child safety. For Alphabet, child safety is a critical component of maintaining its social license to operate, as failure to protect minors would erode trust among parents and damage long-term brand loyalty. The company mitigates this risk through a measure such as harsh matching technology to detect and remove harmful content, helping platforms like YouTube remain the brand safe and avoid the advertiser backlash. At the regulatory level, proactive compliance, particularly under frameworks like the EU's Digital Services Act, acts as a form of risk management. By setting high internal standards, Google reduced the likelihood of stricter external intervention that could disrupt its core operations. From a commercial perspective, ensuring a safe environment is essential to protect advertising revenue. as brands are highly sensitive to content adjacency. Finally, child safety also supports long-term growth by fostering early user trust, effectively building lifetime customer value, and sustaining future market share. Moving on to the leadership under Paija. Alphabet has successfully operationalized an AI-first strategy, aligning all functions around a unified direction. For example, integrating Gemini across products. This reduces internal frictions, improves the coordination, and accelerates execution. The company has also strengthened execution discipline by shifting from growth at all costs to efficiency-focused operations, emphasizing durable cost control and higher ROI. This leaner structure enhances operational excellence and resource allocation. So, in terms of the talent strategy, leadership is reallocating human capital toward priority areas such as Google DeepMind and Google Cloud, while breaking down silos to improve cross-functional collaboration. Finally, leadership balances AI innovation with ethical responsibility, reinforcing trust with regulators and partners. This approach supports long-term stability while maintaining competitive advantage in the AI landscape. So that is the end of the presentation. Thank you for listening.